As major US indexes continued to plunge amidst the possibility of war between Ukraine and Russia, US President Biden signed an executive order prohibiting trades, finance, and investments to breakaway regions of Ukraine. News reports also say that the current US administration has also prepared an initial package of sanctions against Russia, which includes cutting ties with Russian banks if Russia invades Ukraine. The stock market isn't looking too hot right now, but the real question is, should investors be really worried? Is it time to start running away from the stock market? If you're an investor worried about what's happening in the world right now, then stay tuned until the end of this video as we'll be discussing some important points you don't want to miss. If you're new to our channel, hello and welcome to Wealth Gambit. On this channel, we cover the latest stock trends and research, whether it's about what's causing the stock market to plunge or going into a company's financials, we cover it all here. If you like that type of content, make sure to like and subscribe. Shout out to all of you who commented buy the dip and welcome to the trenches in our past few videos. Thanks for watching and commenting. You guys are the real ones. As the threat of war escalates between Ukraine and Russia, US investors are starting to panic, which is causing a dip in the stonks. For transparency purposes, we're not financial advisors and none of this is financial advice, so please always do your own due diligence. According to Bloomberg, stock contracts for March have decreased 2.2% from their close on February 18. As of February 21, 2022, reports show that Dow Jones International Average Futures were trading 1.4% lower. S&P 500 Index ES00 futures were also trading 1.6% lower, and Nasdaq 100 NQ00 futures were trading 2.2% lower. Analysts attributed the recent slump in the stock market to Russian President Vladimir Putin's order to put troops as a peacekeeping force in the two breakaway territories in the Donbas region of eastern Ukraine, the Donetsk People's Republic and Luhansk People's Republic, DPR and LPR. Putin's order came after he signed a decree recognizing Donetsk People's Republic and Luhansk People's Republic as independent states and guaranteed their security with Russian troops. Hours after their emergency meeting with the UN Security Council, US President Biden signed an executive order prohibiting trades, finance, and investments to breakaway regions of Ukraine. The US president states that he is denying Russia to profit from its blatant violations of international law. According to the Wall Street Journal, investors worry that a war between Ukraine and Russia could prolong elevated inflation and developed economies by disrupting supplies of important commodities. They indicated that Russia is one of the world's largest suppliers of oil and one of the biggest exporters of wheat. On top of that, Russia is a major metals producer. On the other hand, Ukraine is one of the world's major suppliers of corn and wheat. Swiss Finance Institute researchers studied US military conflicts and its effect on stock prices in 2015. Based on their research, when there is a pre-war phase, an increase in the war likelihood tends to decrease stock prices, but the ultimate outbreak of a war increases them. But in cases when a war starts as a surprise, the outbreak of a war decreases stock prices. Mark Armbruster, the president of Armbruster Capital Management, also studied the stock market from 1926 through July 2013, and he found out that the stock market volatility was actually lower during periods of war. If the conflict between Ukraine and Russia continues to rise, and in an event when a war breaks out and Russia decides to stop supplying crude oil and natural gas to some countries, this could eventually lead to higher energy prices. And high energy prices leads to a domino effect on the prices of daily commodities. Investing your money in the midst of a war breakout sure is frightening, as these events lead to a lot of market volatility. But if the stock prices increase in the ultimate outbreak of a war, then this could be a good buying opportunity, assuming we don't all get drafted first. But any kind of war results in a nightmare, and we're still hoping that the government's involvement in this conflict finds a way to resolve this peacefully, because as Neville Chamberlain would say, in war, whichever side may call itself the victor, there are no winners, but all are losers. That's it for today's video, guys. If you found any value in this video, share it with someone who likes this type of content, and don't forget to like and subscribe, as it helps a lot with the YouTube algorithm. Until next time, peace.